Hello everyone and welcome to my morning report analysis videos on Friday 14th of September with me, Richard Perry, market analyst at Hantec Markets. If you're looking across the Forex majors, there is certainly a dollar negative vibe going on. We've seen that ever since pretty much in the last week or so, I suppose, but accelerated a bit yesterday with the string of events really, which was pretty much dollar negative. We initially sort of saw the more positive vibe coming out from the trade dispute, an invitation from the US White House to China to come and resolve the issues. Seems to have improved market sentiment, and then you had US inflation data coming out in the last couple of days, underwhelming. You had a pretty stable or supportive ECB update yesterday, which helped the euro higher, and we've had continued sort of strengthening of sterling on the Brexit news. So generally, this is all sort of added up towards a weaker dollar, and that weaker dollar has started to sort of move to the downside really on that dollar index, multi-week lows now, and testing supports back from July now. So that is a really interesting move that we've seen. Equity markets also driving positively through the improved risk appetite again. S&P 500 again strongly higher, 0.5% yesterday, really pulling some decent gains now, sort of looking out towards the highs again. And it's pretty much reflected in the European moves today, although slightly coming off their early highs. You've still got a positive sentiment that tends to be reflective in those European markets, although the strengthening of the currencies against the dollar not tending to be all that positive for equity markets. Interesting underperformance in FTSE 100 continues. Also, we're seeing gold, which is pulling higher, above $1,200 now, and holding that level. The oil price, interesting. Oil price has been volatile in recent days as the Hurricane Florence has been coming into focus. Big strong move up higher at the height of the strength of the winds, and then the winds have been downgraded. Subsequently, the market fell off on WTI, finding a bit of support. Obviously, the hurricane is going to cause some damage, you'd think, so that's going to help to drive a bit of demand for oil. But yeah, a bit of volatility around oil surrounding that hurricane. But certainly weaker dollar and improved market sentiment is the theme of today. Now we're looking out for retail sales for the States this afternoon at 1:30. And the expectation is for 0.5% on the ex-autos basis. Then we're looking at industrial production, 0.3%, and an improvement on capacity utilization at 2:15. And then Michigan sentiment at 3 o'clock, expected to improve marginally to 96.2 from an upwardly revised 96. I think it was 96.6 from 96.2. So there you go. Okay, so my chart of the day is Aussie yen. It depicts risk appetite nicely, and you can see that throughout this week the risk appetite has been improving, and subsequently Aussie, which is a higher risk, deemed to be a high risk currency, versus the yen, which is deemed to be a safe haven currency. The Aussie yen has risen strongly, and it's now testing this downtrend. 2-month downtrend comes in around 80. Spot 80 area, which is interestingly around yesterday's high, so basis of resistance around that area. So if you can break above yesterday's high, closing basis, that would be not ideal. You'd see that downtrend broken, and you'd see the momentum indicators which are already picking up on the RSI, stochastics and MACD lines. That bull cross on the MACD is certainly encouraging. I said on the morning report that the last 5 in the last 6 months, 1, 2, 3, 4, 5 have all produced strong rallies. Now this latest one back in August wasn't so strong, but certainly the previous 4 were produced very strong runs higher. So we're in the midst of that now. So a breakout of that downtrend would open this pivot around 81.80 once more. Looking on the hourly chart, you can see this run of higher lows, higher highs. You can see a little base pattern going on here, little head and shoulders reversal, which has actually now reached its target, but positive momentum configuration above 40 on the RSI, above neutral on the MACD lines. Anything that unwinds that, I think, is a chance to buy. You've got that around 80.20 initial support area. I suppose you could even argue where the market found a support around sort of 80-40, 80-35-40, but 80-20 and then 80 figure I think is a decent level to look at. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.